Hey everybody, I'm Johnny. Um,
Hi,
yeah, it's time to check out the market again, and we have Benz here. Hey Benz, how are you doing?
hi everybody. Hi Johnny. Thanks for having
Yeah,
me again to this week.
yeah. Let me lay down the agenda for today. We're gonna have a overview of the current market, and then me and Benz will talk about some macro overview, some macro updates, because we have some important economic events coming tomorrow, and also on Thursday night, right, Benz? We have the GDP and also FOMC power speech, and that will be very important as we expect more volatility coming ahead. And we'll talk about it in a bit, and then if we had time left, and then we will go on to some on-chain indicators because we have been in a bearish downtrend for quite a while, and I'm sure a lot of you guys would be interested to check out some bottom indicators. Yeah, right. It's time to buy the dip, and probably I'll lay down a few indicators which will be helpful for you guys to to assess the market trend, and for reference to determine if it's the right time to buy some dips. And we're gonna also cover some market news which are quite important because since the FTX collapse, and then there are a lot of institutions being tied to the FTX black hole, and then we're having BlockFi filing Chapter 11 bankruptcy, and that's another pathetic event, and we'll talk about it in a bit. So without further ado, let's look at the current market first. I would like to show you the liquidity chart here. Overnight reverse repurchase agreements. For some of you who have not watched our previous episodes, and also who don't know what this is, the reverse repo, and then this is actually an instrument used by the Federal Reserve to withdraw liquidity or to absorb excess liquidity in the market. It is actually an agreement entered by the Fed with their counterparties, for example, money market funds, institutions, hedge funds, and central banks, and they're going to deposit their cash with Fed, and then they're getting rewarded with the award rate of the lower boundary of the interest rate. And basically, they deposit money in the reverse repurchase agreements, and then they get rewarded by some interest rate. And that this is what it is. And then if it increases, which means that money is being absorbed into this instrument, and then money is being we can deem it as an extraction from the market. And then when it decreases, we are expecting money to be circulated back into the economy, and that's a bullish case. And we are seeing a clear downtrend since October, a clear downtrend of the overnight reverse repo, and that's I would say a little bit bullish for the market since liquidity is not being drained from the market. So we tend to think that, oh, the RRP decreased, and then the money must have gone somewhere, right? And would it be the Bitcoin market? Might be. There's a possibility that, you know, the money being circulated back in the economy might find some other better investments to park with. For example, maybe S&P, maybe other indexes, um, maybe treasury bills. We're gonna check out the interest rate, and also the award rate for those to compare the attractiveness of these items. And then we're currently seeing a big divergence here as I put a green circle down there, right at the bottom, right side of the bottom, and then we are seeing the divergence. And what this divergence means is that in the blue line we have BTC, right? BTC price, and then the red one is the inverted RLP. I just invert the amount of RLP so that it becomes positively correlated to the performance of Bitcoin. And then if inverted RLP goes up, we tend to think that Bitcoin will goes up too. And we're seeing a clear positive correlation relationship between inverted RLP and Bitcoin. And just like what we saw back then in January 2022, the inverted RLP increased. We saw a spike there, and then another spike there, and then the Bitcoin's price reacted afterwards. It's very clear, right? And the inverted RLP dropped significantly, and then the Bitcoin's price collapsed as well. And the inverted RLP went sideways here since June, and then Bitcoin also went sideways into a consolidation phase. But we are now seeing something quite I would say abnormal, a little bit strange and weird because we have not seen such divergence back then, right? What, yeah, yeah, Benz, we have a big divergence here, and maybe what I want to know what's your view on this divergence? Are you bullish on this divergence, or what do you think about the current market? Maybe you can also lay down some macro overview, and then we're gonna come to a conclusion about whether this will play or not.
Because earlier you mentioned that this inverted ripple repurchase agreements are in a way sort of like a leading indicator for BTC price, right?
Yeah,
So, like what you mentioned in December, January last year, there's a spike, and maybe 1 month later, uh, BTC reacted and it went back spike upwards. So, for what I see, there's a pattern. Like, there's always a spike. Uh, when the even the RRP spikes, 1 month later, the BTC price spikes, right?
yeah, yeah,
Uh, yeah, I think previously, like when I first joined this program, we were talking about on-chain matrices are pretty healthy. People are coming back on-chain to do trading, to do swaps, activities are coming back. And then the FTX incident happened, right?
yeah,
So I feel that um we were supposed, I think, like even from what we discussed previously, I think BDC prices were supposed to trend upwards at a point.
yeah,
I think just that the right now the market sentiment is uh it wasn't so bad. Yeah, I mean it
yeah,
wasn't really good right now,
yeah,
and people are really like FUDing like mad.
yeah,
Every small little tweet can be uh, you find a
yeah,
tweeter is like FUD.
yeah,
Yeah.
yeah,
So right now I feel that macro conditions right now is still all right. Interest rates, people already know interest rate is gonna be high because inflation is high, the Fed's gonna be holding interest rates. Holding high interest rates for a long period of time. Uh, I think the market is very cautious at this point of time. I think
yeah,
other than that, on-trade matrices, I think not they're healthy. They're not. I mean, they're fine. They are not as bad as we think.
yeah, yeah. Okay, so what you said is that the current market in terms of macro is not that bad at all, and liquidity is looking good as well. And since we have two important coming economic events, which is I think it's as a GDP forecast, and also the Powell speech, and then maybe we can get a glimpse into the forecast of the FOMC meeting, right? Let's
Yeah,
try to predict or maybe to assess their overall altitude. Are they being more hawkish, or they're gonna get they're gonna get dovish a little bit? So, yeah,
I think like over the weekend, I think from Monday to Tuesdays, there were a lot of like I think there were 3 or 4 Feds speakers or committee members came out to give their views on the market. So I think
yes,
first one is on Bulat. I think Bulat. I think if you do not know him, he's a very hawkish person, and
yeah,
he's
he's a very hawkish person. Yeah, I agree.
yeah
You
yeah
can see from the first sentence, right? We've got a ways to get restrictive, and that's not good
yes
looking for the market.
yes. So it's a restrictive, and then he mentioned that Fed's target policy must be at least within the range of 5 to 5.25% for it to be sufficiently restrictive. So he said 5 to 5.25 is the minimum that he's looking at. So
Yeah,
it can even go up even higher. And right now, we can touch on the expectations of the market later. But right now, the market is like looking at around 5 to 5.25 as well, which is in line with what he's talking about. Yeah.
Yeah,
Yeah.
you just hand over me the table on the left hand side, top of the slide, and then there are the meeting probabilities. So in December, the forecast and the
Yes.
expectation tends to
December
yeah
67.5.
67.5% goes to
Yes.
425 and 450.
Yes. Like if you compare that 67.5% to last week's expectation of 50 basis point hike is around 75%. So
Yeah,
in a way, we kind of know that the market right now is a little bit more uh worried, wary of 75 basis point hike after the Feds came out to speak.
yeah,
Yeah. So hence it from 75 basis point drop to 67.5%. But ultimately, all boils down to what Jerome Powell is going to say later in a few hours' time. I think it's 4 to 5 hours' time. So
yeah,
I think that is the most important speech that everybody to take note of.
yeah,
Yeah. And then if you go back to the second speaker, which is Williams,
yeah.
Williams is more like someone who is pretty neutral. Yeah. But he's a little bit more optimistic.
Seems
So
like a nice guy.
yeah, it's kind of like compared to Bullard, Mr. Williams is more like a nice guy. He sort of like he's sitting on the fence. He do not give a lot of direction of where the Fed is going. But he did if you look at point three, he said he do not push back the idea that the Fed will move at a slower pace next month. So he also said that in a way he mentioned that 5% interest rate is the target, but he support the move of slower pace of rate hikes
Yeah,
compared to bullets. So he like recommends like, or maybe we instead of two more 75 basis point, or maybe 75 50 basis point hike, we can do maybe 50 50 25,
yeah,
something like that, to get
yeah,
to the target of 5 to 5.1%, which is
yes,
in a way will enable them to sort of like have a soft landing and have time to actually uh, save the market in case of market tantrum, like jobs suddenly, unemployment suddenly spikes up, or more people are getting retrenched, or more companies are going bankrupt because of high cost of borrowing, stuff like that. Yeah.
yeah,
And
right.
then the last one is Barkins.
Bucking.
Barkins, I think, is more dovish in a way. Say, oh, I'm very supportive of the path that is lower, probably longer, and potentially higher. I think all
Yeah,
three Fed speakers, in a way, they are like talking about the same thing. Now, they want high interest rates, but at a slow pace, for a longer period of time. This is the story they are painting to the market right now. Yeah.
okay.
So, yeah. And he said that, also mentioned that, you should not stop. Uh, he wants to make sure that the Feds do not stop raising interest rates do not stop raising interest, meaning that lower interest rates too soon in case like inflation goes out of control. So he wants it to be in a way the high interest rates to be prolonged for a period of time, keep it under control, then they start to lose their monetary policy. Try to loosen their monetary policy. I think that's what the Feds are trying to do. So,
Yeah, yeah. I think they also want to keep their credibility,
yeah,
and yeah, and that's why I think they won't back down in terms of curbing inflation. So it's just
yes,
a matter of time, whether at a slower pace or at a faster pace, which the later at a faster pace might wreck the economy. And I think the sensitivity of adjusting the pace of raising hikes will significantly impact the market because they try to do a soft landing, and if they raise too much at a short period of time, and probably some bad things gonna happen. That's what I think about.
Yeah. Uh, I think I shared like what's the target of the I mean what's the KPI of the Feds when I first started on this show, which is the first one is keeping inflation within 2% and
Yeah,
keeping unemployment rate within 4%.
yeah, I
Right?
remember. Yeah, two main
And so
goals.
the two main
First of
goals.
all, yeah,
So unemployment rate is right now below 4%, which is really in line with the KPI. Then right now inflation rate is too high. They need to control it. So in a way, they sort of have to forego their KPI for the uh, unemployment rate because unemployment is A plus right now, right? And inflation rate is like F minus. So they sort of like need to balance it out so that they can have inflation rate to be like at C or B, uh, unemployment rate to be C or B. To sort of have balance. The reason why they want to keep interest rate for a longer period of time is because uh, firstly is they want they don't want to like they want to make sure that the public have confidence in them because if they were to suddenly have a U-turn in their policy, meaning that one like for the first few months when inflation rate is under control is going down, they start to loosen their monetary policy and then it shoots back up. They have to do a U-turn. They have to add maybe another 50 basis points to actually curb it. Yes.
yeah,
So I think this is one of the reasons why Fed is very cautious also. Yeah. And
yeah,
then let's touch on the US yield curve. So
yeah,
US yield curve right now is more inverted compared to 1 month ago. So we are talking about yield curve inversion way back. So what happens when yield curve inverted is sort of like signal for recession 10 to 12 months down the road. Somewhere within that line. It's not a hard rule, but according to history or historical performance of the market, this is what the market reacts from there because of uh lower because of a high short-term interest rate means the market is not confident with the US economy in the short term. Maybe a few months down the road, 1 2 years down the road. This one is very hard to say, but because is more important, hence there's higher risk if you were to put your money somewhere you want to invest somewhere. And next is on economic data. First one is the US core PCE. So PCE stands for personal consumption expenditure. So it's sort of like it's a data for how the US consumers consume and spend their money. So I mean inflation is where people has a lot of money, a lot of cash. They spend a lot of money because they have a lot of spendable income. They cause inflation because there's a lot of money chasing after a limited amount of goods. This is the reason why it causes inflation.
yeah,
And since core PC is very high, and hence inflation is still there.
yeah,
We don't want people to overspend because over a limited amount of goods.
yeah.
And
We
this
gotta be
cause
careful here too because
yeah,
the forecast is 5%, and then previous is 5.1. So that if the data comes out exactly as forecast, and market might take it as a bullish trend, bullish signal, and if it comes lower than 5.0%, which means that the demand side of the inflation problem has been a little bit alleviated, and therefore, which is also bullish as well. So if the data comes out 5.1 or exceeding the forecast, and then I suppose that would be a bearish one, right? Ben, am I right?
yes. So according to like normally how all this data is so how people interpret this data is when core PC is high, is more bullish on US dollar. So when it's low, is bearish on US dollar. I mean like
Yeah,
higher than forecast. But however,
Yeah.
right now we are at a stage where, when if my data is better than expected, right? It sort of like gives the Feds more bullet to actually raise interest rates, which I don't want it to happen.
Yeah.
Yeah.
Yeah. Exactly.
So but however, if uh it's worse than expected or the economy is going bad, right? It's also
Yeah.
a bearish both cases are bearish right now. If you understand what I mean. Yes,
Yeah.
it's if we interpret it like that, it's like it's the game theory. You have to really like uh lay down your cards and actually find which one is the ideal one for everybody. Yeah,
Mm.
like for non-farm payroll as well, which is on Friday. I think is when the 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 opening bell during US opening bell forecast is 200,000 for the month of October. Previous is 261,000. So analysts are actually forecasting like employment. I mean like payrolls are actually will be lower than previous month, meaning that the labor market will be weaker, is more weak or weaker or October,
Yeah. Yeah.
and sort of sets the bar really low really, right?
Yeah.
If
Yeah.
if if payrolls are high, means the labor market is really good, means the
Yeah.
Feds can afford to hike a 75 basis point.
Yeah.
But if
Yeah.
labor market is lower than 200,000, data is lower than 200,000, the market is bad. And
Yeah.
from there, people is like, oh, I'm not going to invest. I don't take out my money because the economy is going bad.
Mm-hmm.
It's sort of like a risk off sentiment for both. However,
Yeah.
but how we interpret it is if payroll is high,
Yeah.
if payroll is high, it's more bullish for US dollar. If low, it's bearish for US dollar.
I see. I
Yeah.
see. I see. So probably two important events coming ahead, and I expect market to, you know, to move very volatilely. A lot of times, before when we have FOMC meeting, when we have PCA data come out, and then markets often, I mean, the USDX, the DXY, and also currencies, for example, Euro to USD, GBP to USD, Japanese yen to USD, and also gold. And also, before we had a cryptocurrency correlating to DXY, but we are seeing less correlation right now. But probably liquidity is being dried out after so many tragedies. And before when the DXY when we had this economic data coming out, and then the markets tend to do a round trip roller coaster. A lot of times they pumped and dumped. A lot of times we saw a lot of pump and dump schemes in a short period of time. So my suggestion is to better stay cool and stay up for a while for at least like 15 minutes, and then you're gonna determine the trend afterwards because
Yeah.
in the first 15 minutes there will be chaos, and after 15 minutes the trend will be quite obvious, and then you can take your bet after that when the trend is clear. You don't want to bet against the trend, right?
Yeah, exactly. Previously, I was a trader. So, I mean, like, I was a retail trader during COVID period. So,
Yeah.
whenever there's a important economic data that is released, and you know that it's bullish for maybe for the Nasdaq or S&P 500, right? But
Mm-hmm.
within that few minutes, the whole thing just went down 1%, and I got
Yeah.
stop loss. I got
Stop
like
out. Stop out.
I stopped out, and
Yeah.
then the minute I got stopped out, it just shot back 2 to 3% upwards. I was like,
So yeah, took a
what the
round
heck?
trip.
Yeah,
Yeah, just shenanigans, doing market liquidations as usual.
yes.
Yeah, washing trading. Nothing special.
So
So yeah, and thank you, Ben, for having the data here. I think we have a better understanding of the current market right now. So I think we'll cover the economic later next week, the core PCE index and also the US non-farm payroll and also the Powell speech. We're going to do some analysis and we're going to make a summary. And then next week we'll come back with the summary, the conclusion, and but I think then we have a much clearer expectation and also a better forecast of the market, in crypto and also in macro as well. So let's get back to the crypto, and then we just saw the news that BlockFi just filed bankruptcy. Chapter 11 filed bankruptcy because BlockFi is a creditor to FTX that lent to Alameda Research, that lent the money to Emergent, which was a shell company owned by SBF, the CEO of FTX, and the shell company Emergent also bought Robinhood shares that were pledged as collateral to guarantee BlockFi, the loan to FTX that was used to bail out BlockFi itself. So it's so complicated, but basically BlockFi is tied to FTX, so closely tied to FTX. Crypto lending, and also I think they're also uncollateralized lending. So yeah, and therefore when FTX got wrecked, BlockFi would also got wrecked as well. And a lot of retails and also institutions are also being damaged in this tragedy. So BlockFi damaged again. So before, I think back in May, and also when Lunar Terror collapsed and 3AC collapsed, imploded, and then I think BlockFi at that time also took a severe hit because they borrowed a lot of money to 3AC doing leverage trading, leveraging, and then 3AC blew up, and then BlockFi just liquidated 3AC's position, but they did not disclose whether the liquidation was liquidated at a loss or if that liquidation was doing fine. We don't know, but it's reasonable to think that BlockFi definitely was insolvent right now. I know they filed Chapter 11 bankruptcy, but back two weeks prior when FTX just imploded, and we also tend to think that BlockFi will be tied to FTX, and the chance that BlockFi will go bankrupt was really high. And now BlockFi was, filing for Chapter 11. That's a tragedy, And also we had, we saw that in Chapter 11 they filed a legal document, and also we saw that there was actually a charge, a settlement, basically a penalty issued by the SEC to BlockFi for violating some regulation, probably selling unauthorized securities to retails, and that should be penalized, and the penalty was like $30 million, right? And then some people realized this settlement, and then they thought if this settlement could be redone, that just undo the settlement, undo the penalty, and just help a little bit to save the retails, right? Because in the end, the money came from the retail, right? Same as Genesis, right? Same as Gemini Earn. They absorb a lot of money from retail investors, same as FTX, and in the end, retails are wrecked and no protection. And some people suggested that the SEC could, maybe find a way out, undo the settlement, undo the penalty, to pay back the retail a little bit to help them. I think this might help, but I don't think the SEC would like to do so, because the fine was paid, and it's actually, what is done cannot be undone, and it's actually a rule. And then I feel very sorry for those who put their money on BlockFi, and then another tragedy. So right now, people are also in panic, and we have lost trust in these centralized institutions, especially In terms of staking, we don't want to stake our money on anywhere else because traumatized, we're a lot traumatized, and things just not looking so good right now. Right.
Johnny, actually, I got a question. So this settlement is built by the SEC?
Yeah, yeah, because back then BlockFi was selling securities. What I mean by selling securities is that they they did business in cryptocurrency in one of the states in America. I think that's I forgot which state, but uh, the SEC sued BlockFi for violating the rule for selling unauthorized securities because at that time crypto was not regulated, and by selling crypto to retails, this is actually not allowed in some of the states in the US.
I see.
Yeah,
So
and the SEC sued BlockFi for doing this, and then they came to an agreement that the lawsuit could be settled by paying the settlement fee. Basically, you are now violating our rules, SEC said, and then if you want to settle this down, you're gonna give us money, and that's $30 million.
okay.
Yeah. So
Yeah.
what I
I mean
think
like
about this, yeah, go ahead,
I
Ben.
mean like
Go ahead.
BlockFi is already bankrupt. There's no point
Yeah,
they charge a settlement when FTX. I
yeah,
mean
yeah.
when
Before,
block
before, before. I think it's in April. I think it's in April or May. Somewhere like
oh
somewhere then.
so since then BlockFi has not paid the $30 million.
No. I think they paid. They already
Okay,
paid.
they paid. Okay,
Yeah,
okay.
this is just some transaction records.
I see.
Yeah, some
Okay.
big money records. So they have the loan to the creditor, name of the creditor, and complete mailing address here. They have some loan worth of 275 million, and also they have indenture of about $730 million. And you can also see other other big money. But one thing that raised our attention was the Securities and Exchange Commission, SEC, the settlement, suing them for violating some regulation for selling unauthorized security. Yeah. So after BlockFi, some people on Twitter are already saying Nexo is next two, and people are actually so worried about Nexo because uh, I gotta show you this one because Nexo is offering right now. They are offering incredibly high yield for their customers. So imagine staking your USDT and earn up to 12% in a bear market like this. And also for USDC, you can earn up to 12%. Oh, that's amazing. For stable coins, it's incredible and even a little bit ridiculous, right? And people are first suspicious and also skeptical about, how how does Nexo earn this money and pay back their creditors.
Yeah. I
Yeah,
think it's like we mentioned about like lending protocols or lending products last week, right? So
yeah,
I
yeah,
think right
lending products.
now,
Mhm.
given that like the whole crypto ecosystem is, I would say, interrelated or connected
Yeah,
because it's like I invest in you, you invest in me. Yeah, that is because
yeah,
one whole big circle.
yeah,
And I would say Ponzi scheme. It's definitely not a Ponzi scheme. It's just that because uh if something happens within that whole big circle, everything topples. It's like a ripple effect.
hmm,
Like if like for example the FTX is sort of like a big, I would say it's institution. It's like a big player in the whole system, and they have been investing a lot. So
yeah.
if FTX fail, then after the Genesis comes along, Nexo comes along. That's why this all the everything coming in. So
Mhm.
I think because if I mean for investors wise, if you're afraid of uh whatever that's happening right now. Don't put your money into high yielding products. I mean,
Yeah,
something is
especially
like
something
good.
very suspicious. Like
Yeah,
I'm not spreading FUD here. I'm just trying to make sense of some reasonable logics. So I'm actually very interested in the strategies adopted by Nexo so that they can pay their creditors up to for up to 12% for staking stable coins on their platform. And if you want to, delve into their business structure and, um, I can actually show you this tweet later. So let me just switch to Twitter. So one moment, okay. So one moment. Let me just go to Nexo. I want to show this tweet because they break down their business model and they're trying to explain to the customers um, how they're gonna be able to pay back their purchasers. So here, Nexo, yeah, can you see the share screen, Benz? I think,
yep,
yeah, yeah.
yep.
So the tweet is here. So it's wait a minute, it's here. Yeah. So, okay, not this one. This one is just a clarification, saying that Nexon has zero exposure to FTX, Genesis, Gemini, BlockFi, Lunar, 3 Hours, Capital, Celsius, Babel, Holding. Actually, so basically all institutions which went bankrupt in the past few months, and Nexo now saying they don't have exposure to these institutions. So what I'm going to show you is their business structure. And I'm going to show you something here. So first of all, they say that they do not lend their Nexo tokens to other institutions, nor do they take the Nexo tokens as collateral for receiving loans. And that's pretty good because what we saw in the FTX event is that FTX use FTT as collateral, right? And
Yep.
Alameda borrowed money from FTX using FTT as collateral, and that is actually an illiquid asset. And when the illiquid asset was maybe attacked by some whale dumping tokens and causing panic in the public, and then just got liquidated. Okay, so it's good to hear that Nexo are not offering Nexo tokens as collateral, and they are not doing lending the Nexo tokens out, which is a good thing. And I also want to show you here. There's a tweet down there. So yeah, here. That's a really long tweet. So I'm just gonna pick 2 or 3 important tweets because they break down their strategy here. So example one, okay, reverse cash and carry arbitrage, which combines a short position in asset and long future position in the same asset, capturing the funding rate, which at times can be substantial, especially during downturns. So basically, they are laying down their money making strategies here, and they claim that they earn money through these strategies, and they have been profitable, and they are not doing some risky stuff like lending out the illiquid Nassau tokens, like that. So probably you're gonna if you are a user of Nassau and you're a customer of Nassau, you should check this trade out because you might really want to study their policies and also their business strategy and model very carefully to evaluate if the risk is bearable or not. So, but right now, what they're saying is very positive, optimistic. So, what they're saying, right?
Yeah,
So,
that's what they say.
yeah, that's what they say. Literally, just take what they say. Because FTX, Sam said they had yeah, Sam said they did not have any insolvency issue, which turned out to be wrong, right? These things could be lied because we've been lied so many times, and we gotta be really careful to assess the risk. So we can. I'm not saying we should not trust Nexo. I'm just saying that risk management plays a very important important part in managing your assets and managing your investments, because there are times that black swan could happen, just like FTX, and we cannot assure that once a black swan happened and there could not be another one. No, 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 no. There could be another one, and there's a possibility that black swans can happen more than one, right?
Yeah,
Yeah,
I think Nexo is like trying to stop the FUD about them,
yeah, yeah.
right?
That's good. That's good. Yeah, really, that's good.
Yes. And also like I mean Nexo has been around for quite some time.
Yeah.
When I just started to do, I've really like
Yeah.
I've already researched about them. They're pretty
Hmm.
good. I mean, they have been fully audited by Certix, if I'm not wrong. Because Certix
Hmm.
is really reputable audit
Yeah.
firm. And also, however, one concern about the tweet earlier was their market neutral strategy.
Hmm.
And I think they long think it's like I long something. I long a contract and after that short I long a perpetual and short a future, something like that within line. So I
Yeah.
can earn a sort of like arbitrage. I
Hmm.
think as a user or as a user of Nexo, I think you should
Hmm.
read into what what kind of market neutral strategies did they use.
Yeah. Yeah.
Whether
Yeah.
is
Yeah.
it
Definitely.
profitable or not. Yeah.
Definitely. Yeah. Definitely. Definitely. They have a lot of examples here.
Yes.
Reverse cash and carry arbitrage, market neutral strategy in periods of heightened volatility involves price arbitrage. So a lot of arbitrage in trading.
Yes.
And also they have the company structure here. This is basically their business model. So the risk comes in the, I think the part play, the risk lies in borrower margin customers there. Crypto backed credit line, that's a risky line. Low interest, also risky line. Trading fees, not risky. It's a real business, right?
Yeah.
And so they're being transparent. They're doing this thing. I think that's good for the customers. The customers will be assured. And I think it would be better if they disclose more information.
Yeah.
Yeah. So just like actually we're seeing a lot of institutions here opening to more transparency. For example, proof of reserves. You see, we already have a lot of entities doing the proof of reserve. Kraken, Nexo, Conflow, GIO, HPDC, Huobi, Bitmax, LEDN. These are the institutions which can assure the customers, being transparent. And
Yeah.
also Binance, yeah, also Binance, right?
Yeah.
Yeah. So yeah. So wait a minute. Let me get back to the slide. Yeah. So yeah, better check out the Twitter of Nexo if you are a user and also a customer. Learn their market strategy and also read their study their business model to assess the risk
Yeah.
on your behalf. Yeah, and but personally, 10% yield, that's a little bit suspicious, really suspicious, because I don't think other competitors are offering such a high yield currently, and uh,
I think even for Huobi, we are offering up to 4%, which is
six
I think is
six
quite a
percent, yeah, yeah, yeah,
6%.
four to
I
six
think
percent, yeah,
I think that's a little bit high as well.
yeah, yeah.
I
That's
yeah
too attractive already, yeah, and here's a
yeah
double,
yes, and this is double. And
yeah,
also one thing is like even for risk-free interest rates, like if you want to buy a treasury bill or treasury notes, one
yeah.
year,
For
2 years,
example, the RP, the reverse repo, right? You can check out the
yes,
reverse repo award rate. So wait a minute, let me check this out for you guys. Go ahead, Benson.
yeah. So it's like the risk-free interest rates, like if you invest in a treasury bill or treasury bond, you get
Yeah,
dividends for like 5% a year right now.
yeah,
So
yeah,
technically, you're buying $100 worth of bond for $95, and
yeah.
you get $5 after 1 year. So this is what risk free is.
This is risk
And
free. This is
yeah,
risk free. we reverse repo. This is risk free because it's assured by, it's promised by the Federal Reserve. This is actually risk free. So right now, risk free money is around 3.8%.
That's
Three point
really
eight
high.
percent.
Yeah.
Yeah, and also a part of the reason why decentralized exchanges, the total log value in decentralized exchanges, we're seeing a rapid drop, and that's because the risk-free money is being available over by the Fed, and therefore they are taking away. They are trading that. What I meant was that the reverse repo absorbed excess liquidity in the market by offering a better and a more attractive award rate than the market, and then they're gonna take the money away with them. And that's why we're seeing a drop in the total log value in the overall DeFi ecosystem, because I think a lot of money went somewhere else. They might, why not part with Fed, right? If you have money, for example, like $1 billion, you can earn up to 3.8% risk free interest rate.
This part
Yeah.
of the Fed's I would say open market strategy to actually
Mm-hmm.
suck the liquidity out of the market.
Yeah.
So they sort of increase the interest rate so that people will pump the money back to them.
Yeah.
Yeah.
Right. So that's it for some market news here, and I'm gonna share some big whales move. The Machi Big Brother has sold 150,000 ape coins. So whale detector. This is actually a smart whale, smart money. You look at the buy and sell orders there. Buy low, sell high. Contradictory to crypto bros, buy high, sell low. This one is really smart money, right?
Yeah.
And they just sold a lot of ape tokens, probably meaning that we are seeing an overvalued price with ape coin. Just an example.
I personally feel that ape right now is quite bullish right now because
Are we going to check out ape coin price? Let me just check it out. Wait a minute.
ape compound is quite bullish right now because they are going to start increasing the utility of Bitcoin.
They are
So
increasing the liquidity of ape coin.
the utility.
Or the utility of ape coin.
So
Sell into news, bro.
but it's really good in a way
Yeah, I know it's
for
good. Yeah.
NFT users because right now a lot of NFT, we are in like the NFT winter. So the NFT people were talking about increasing the utility of NFTs. So ApeCoin is sort of like the Bored Ape Yacht Club, all these like blue chips NFTs. So at the start, I think in a few days time, users of the NFT holders of the NFTs and holders of ape coins are able to stake the ape coins.
Yeah. But wait a moment here, Benz. Do you think this pattern is very similar to what I talked about? Maybe Wyckoff distribution pattern? Do you think it's very, very similar? Do you recognize that pattern? Maybe I have to share screen again. So new share. Wait a minute, man. No, actually, I just shorted 8 this morning.
Oh, really?
Yeah. So because I knew it's actually a Wyckoff distribution pattern. Yeah, I should have told you. Yeah, I'll tell you next time when I spot this trading opportunities here. You see, buying climate, UTAD. Yeah, actually, the signature of this distribution is in the UTAD characteristic. So what you're seeing here, the UTAD thing, and it has another name as well. It's called a false breakout, right? We're in a trading range here. False breakout to the other direction. Yeah, back to its pumped. So yeah, just some sharing. Okay. Not very important though. If you want to learn something about Wyckoff methodology, because it's super cool, and you can learn, you can evaluate whether the market is in a accumulation phase or distribution phase. Check out our report on Huobi Research. You can just search for the Wyckoff methodology on Bitcoin and Ethereum local bottom formation and variable protocols after the bear. And we actually predicted the local bottom in June, back in June, for real, for real. I wrote this research paper back in June. And then Ethereum pumped to around, I think that's 2K, somewhere 2K, almost a double. Yeah, so definitely you're gonna check that out. We don't have. I still want to share some on-chain indicators because I mentioned in the beginning, a lot of us, I think we are very, you know, we are very interested and also want to know whether the final capitulation happened or not. So in terms of assessing whether the capitulation happened or not, we can look at the realized spike, realized loss spike. Okay, so look at this. The spike illustrates a loss, which means that some people panic sold and they lost money in that transition, and the amount has to be accumulated, and then they have the total amount of realized loss here. So we have this short. We're currently observing a 1.6 billion realized loss here, around 1.6 billion, right? Almost 1.5 billion, maybe. So it's pretty huge, right? But I think we should also know. We should also uh, be aware of one thing. What's important in this chart is to know how big the loss is, but we have to spot the divergence. So what I mean is this. So when price, can you see my mouse fans? Yeah, here. When price keeps dipping lower, and we are expecting more people lose money, right? But no, that actually not. People actually lost less money. What this means is less capitulation. Sellers have already sold all of their positions, and what's remaining is not sellers. It's just maybe no buyers. So price may stall at that moment, at that period of time, but even price keep dipping lower. It's actually bullish. This divergence is bullish. So what we are seeing right now here, we have a big capitulation here. So when price dip lower at this level, we are actually seeing a lower, you see that, a lower realized loss. And that's actually a bullish case. But I would like to see the final capitulation signatured by a very small amount of realized loss. And there's where I aim in, okay? So this is the bottom indicator. I would like to see the final capitulation with very little realized loss. And that's a confirmation of the bottom. It makes sense, right, Benz? What do you think about this?
This exactly like what happened last year May. Last year May leading to last year July, if I'm not wrong. So
Last year, May. Yeah.
last year May, yeah, during that period of time where we are not sure whether we have reached the end of the bear market.
Oh,
Yeah, and suddenly
yeah,
it comes NFT hype came in, right?
yeah,
Or the exchanges like OpenSea and DeFi
yeah,
starts to become like hot again. So uh, during July was a very, I remember that period of time I was enjoying myself because whatever that I bought made money.
hmm
Yeah.
damn, man.
So yeah. So I think I agree with you. So right now we might see a potential lower uh capitulation, market capitulation,
Yeah,
and then that could solidify the case of the listing.
yeah, yeah,
Yep.
totally. Yeah. And also you can check out the exchange net flow volume. So at the time of capitulation, we tend to see that whales are accumulating a lot of coins, and they are moving their coins out of exchanges to their core wallet. And the bottom usually is signatured by a spike in a negative net flow of volume out of exchanges. So yeah, we're seeing some right now. We'd like to see more. Okay. So also CVDD and also realized price here. Yeah, nothing special here. We are very close to the CVDD price, and the CVDD actually predicted not predicted, just fitted into the lowest point of previous cycle for like 4 to 5 times. And I think is doing pretty well this time also. So yeah. Yeah. So some indicators here: CVDD, realized price, exchange net flow, volume, and also the realized profit and loss. You can check them out on the internet. Go search for these indicators and do your own due diligence and yeah, just have a look. They're pretty
Yep.
good. Yeah. So, Benz, anything you want to talk about? I think we're almost at the end of the session.
Yeah.
We've already covered a lot of things. So
Yeah.
next week, I think we'll be, covering the FOMC power speech and also the economic data, non-farm payroll, and also PCE index. Right, then
Yeah, that's right.
we're gonna interpret this data for you guys next week. So better stay
Yeah.
tuned. So in the end, we have a Kenny drop. I saw some users in the comment section down there saying that we don't have. They are advertising as a gift program for more viewers, but there is no gift. This is officially fraud. I will report it to the Huobi management. And I don't think so. I think every time I think we did it, we distribute the candy drop and yeah, make sure you join the program. And for Huobi to earn trading, buy some spot altcoins or Bitcoin, Ethereum, and then spend some crystals to join the candy drop. And we will select 5 lucky stars and we will award them with 100 USDT. So these lucky stars will be notified by SMS. So make sure you try to earn enough crystals and join the job event. So, and also last but not least, check out our hobby research. Our website is research.huobi.com. You can read some insightful research papers up there. So thank you for listening today. Thank you, Benz. Thank you, Benz, for hosting the market show with me.
Yeah. Thanks, Johnny. Thanks, everyone,
Yeah,
listening to our talk.
yeah,
I hope you guys find it informational and enjoying rather than listening to two guys talking to one another.
yeah,
Yeah.
yeah. That's right. Exactly.
Yeah.
So see you guys. See you, Ben.
See you
Thank you.
guys. See you guys next week.
Bye.